Good evening, Wizards, and welcome to episode 18 of Wizard Wednesdays. Now, we're going to jump straight into this one with a recollection of what actually happened in the prior week. So, to actually do so, we'll be looking at the prior week's Wizard Wednesdays, and I'll be showing you a very quick segment of what was covered, going over the current call, which has now exceeded $2,000 in BTC movement, alongside the short position that is running alongside this following movement as well. So, going back to Wizard Wednesdays, episode 17, last week, you would notice that we covered the weekly candle analysis of BTC upon this huge wick movement over here. And one of the first things I did cover was that there would be an attempt, despite how bearish and horrific this candle may have looked, for a very sharp downside reversal. I wasn't too convinced instantly that we would be seeing a reversal from this point. I did believe and did expect to see some form of a pullback and a retracement to at least wick fish around this region before dictating from there onwards and fulfilling the 13,000 region that we've now met, before we can then decide from there onwards if we will see that rollover down and back below the $10,000 region, which I do believe is a very large possibility right now. But for the time being, we need to focus on the current short position and currently focus on if $16,000 is going to become a reality and potentially even exceed to that $16,500 to $17,000 region. As you know, the initial target isn't actually $16,000, it's actually around $16,500. So we're moving forward onto that as well a bit later on, but for now, just going over this again.
To see with such a huge wick now, it's left a lot of room open from the likes of $11,400 all the way up to $14,000 again, pretty much, for price to incline, reject the region, test it out for another week or so, and again, if it breaks through, look at rejections of 13,600 to 14,000, and let's ride that wave all the way up to $16,500 to $17,000.
So, as you can see, we did cover the entire wick region here when price was at around $11,400. But that's not to mention the fact that the trade itself was given from the $10,800 region around here, where I did align a nice Fibonacci setup for you all as well. I believe it was this one. It was one of the other. There was a nice Fibonacci setup in play. We had the 50% lingering around this region as well. And if you notice, I've also changed my chart setup ever so slightly as well. I've completely stripped clean all of the prehistoric analysis that I had on the BTC chart, and I've kept the zones more persistent towards the most recent price action versus having all of these downside levels below, because we've already preempted these levels and we understand they could become a possibility in the near-term future. Then by all means we can just keep that psychologically embedded in our heads versus just leaving the levels all plotted. But again, you know the main key levels. Just as a quick refresher, if I was to mark those up, we of course have that 6k region there and the $8,000 to $8,400 region located just below. Those are the main levels. I'm not going to leave them open for now, but just so you know, they still remain there in terms of any form of downside movement. So looking at the current price action now on the weekly, as you can see, we're on the second week of attempting to breach and annihilate this wick over here, which managed to hit around $3,800. As you can see, we fell just short of $14,000, which could be a key indicator as well that there may be a large turning point in play. Now, before we actually start picking up the momentum and even attempting to breach and start hitting the levels of $16,000 and beyond, I do think it's now time for our next healthy pullback in the market. We managed to hold back. We identified this movement here, as you can see, upon seeing the $10,000 region being met and fulfilling one of our major zones. What you can see happening here right now is a very, very big possibility of a large turning point in the market. Now, as you can see, a perfect test of around $13,200 is exactly what was preempted within the Telegram, the $13,200 to $13,300 zone. Many people tried to go short around this region and it just wasn't looking too promising, as you can see from here. A typical setup on a trade like this, many people would have entered upon a bearish candle, stops just above or even stops breaching $13,000, and they've been absolutely annihilated now. So even if you were going for a simple movement down to $11,600, it wouldn't have necessarily been too wise, because the risk to reward was awful. And again, there was a huge region of interest up here for myself, as I covered in the Telegram, and that very soon got wiped out, now allowing a much more optimal entry over on this side here, which if I go over to BitMEX can show you right now. Moving this over to here, the trend line, I'll get to this trend line in a second. This is a nice region for me where I do believe a pullback could be occurring, and as you can see, we are running at around 670% ROI off a perfect execution, 4-hour time frame, wick accumulations galore in this specific region over here. It looked like the perfect setup, and again, after riding this entire move all the way from here to there, it made perfect sense as we were in synchronization with the market to enter that short position early around this region and potentially stack up on more orders if we do see a continuation higher. What's now leading me to believe that we could be falling even lower from this point onwards is the fact we were resting on this level. I did believe it could cause another wick fish above, but we've slammed below, which does now lead me to see and identify potential pullbacks to the likes on Bitfinex and BitMEX in particular to around $12,800 before continuing lower down to this broken trend line over here. So going back to the likes of BTC to look at this a bit further, as you can see, very simple zones. I'm in two states of mind right now because we've broken above this resistance level turn support, we've rejected, we've climbed higher, and we could be seeing more wick fishing occurring around this region. But in the meantime, after such a strong and powerful bearish candle off that $13,000 zone, it's looking more likely than ever we will just see that little push lower to even tap the regions of $11,600 before gearing us up for the next leg higher. So from a daily candle perspective, if we were to see a closure like this, we can expect some wick fishing around here. However, with the ultimate setup, I gave you the exact region to actually take profit and short from. You shouldn't be at too much risk, and as you can see, I haven't even added my stop loss into break even just yet, but I will do that any second now as well. So looking at this over here, the daily perspective, we've got the rejection. Let's plot a fib to see how this would look in a preempted region. We have 11,300, which would make sense in the extension of a slightly further pullback than normal. So looking at how this trend line comes through, remember, I'm easily always abiding by the wick to wick principles, but this market has been moving extra manipulative than normal. So dragging them down to the bodies has seemingly been a very efficient manner to catch these trades. So take profit is located around $11,300, and as you can see from $13,000, $13,200, we've already seen a pretty much $1,000 movement on that single trade from the execution price already. So you're looking at around $2,000 on the upside movement and $1,000 down already in a single day of closing and re-entering a new trade. So what you're looking at here in terms of percentages is outrageous. From the initial trade anyway, I was exceeding 1,000% ROI or ROE if you're on BitMEX, and looking at this now with an extra 651%, we could be looking at another 1,000% mover. On top of that, $3,000 in BTC movement is not a joke. Yet again, a huge movement we've managed to catch on the Telegram, Wizard Wednesdays, and of course on Twitter. So in margin trading terms, that's 3,000 pips yet again, far outweighing what any other market could provide. And of course, timing was perfect, the execution was perfect. So let's see if we can see this pullback now to really fulfill that new trade we've just shifted over to. And again, using the 61.8 and the 78.6 as guidance, if you look at the upside targets, the fib extension, should we see this pullback, does gear us up for a very nice confluence with the current yearly highs of around $13,800, with extensions leading towards $14,650. So in the event we see this pullback, and if I go to the 4-hour candlestick time frame now, again, we draw that there just to align, break through that ever so slightly, but perfectly correlate with all of these other wicks. You're looking at a pullback towards around $11,400. And if we're looking at this region here, this correlates nicely with the 78.6 where it's aligned, which could then see some wick fishing down to even 10.8, which is why I will be letting the position run potentially down to this zone here, and even dragging that down to 11.2. As BitMEX could see a little further movement as well, that could work out very well in our favor. So hoping to see that all come through, and what I'll actually do right now is add a stop loss, which would be a wise idea, and we will put that at around $13,000. Worst case scenario, this gets triggered. You already know the principles and the way I do this. Let's just do that. and a stop loss has now been added, and I'll drag that a little bit above that wick there just in case there's some wick fishing. Worst case it gets triggered, I'll simply re-enter a bit higher, and at least I've saturated a little bit of profit out the market anyway. Very simple and strict wizard principles I abide by of every single trade, and I know you guys are already mimicking this as we've seen from Twitter. I know one of you have already sent me a very nice profit screenshot, someone else's perfect trend line retest as well. You've all been following the guidelines, and one of you absolute legends did show a profit and a ROE of 356% as well. So crazy things are happening over here at Wizard. All of you are taking on board the principles and analysis and really going out of your way to capture these movements in the market. So in simple terms, what we are expecting for the time being using this guideline right here, if I just quickly extend this and add this there, just a quick rough approximate zone to plot on the charts around here. Again, correlates nicely with all-time highs. We have perfect symmetry across pretty much all of these in terms of the arrow size movement. So the market is moving in waves, as you can see here, of around $1,000 as of present. So we're moving in $1,000 intervals. So why not try and capture these moves at least $1,000 at a time? So looking at the validity of this level, seeing how it's moved in increments every other time, we can use this as a pretty strong indicator of what could happen if price was to break out. So for example, a breakout could lead to a retest and a touch upon this level as well. But that comes once we've seen this movement fulfill. All I know is the stop loss is now at break even and even in a little bit of profit, and I'm not too fussed now what happens from here onwards. But this is a huge region of interest for me, hasn't been retested upon breaking out, so we have to remain ever so cautious of this pullback around this region. So putting that into perspective, what is happening with the overall perspective of BTC? What is happening with this bull run, and how is it looking overall in terms of movement? Because on top of this, we need to look at the downside possibilities as well. And as you know, if we draw this from here to there, we are currently at that 61.8 retracement level, which leads me to believe even if we do see the 11,600 pullback, there is still a bit of open room to see a pullback up here yet again, retest and wick fish around these levels and confirm the validity of this 61.8% monthly retracement. Now again, obviously ignore the extensions, they do not always have to come through. We will not end up in a negative BTC, but it could be more than enough to gear us back down to $8,000. So as you can see, this is all coming through pretty nicely right now. It's all looking very smooth. The monthly perspective as well, we saw a huge green candle, huge bullish candle, and now the current monthly candle is pushing higher. It's testing these levels, but it is slowly starting to find some complacency around the $12,000 region to even $13,000. As you can see where the prior wick was, we've gone higher attempting to break it, but we have not yet broken this level. And if we start closing within these means, then price could be seeing that next rollover to continue towards breaking all-time highs. So daily perspective as well, we'll get onto XRP in a second on top of that as well. Looking at BTC on the daily, so we've tapped that level, tapped it again, pulled lower. All it's doing for me, guys, is just giving me more confirmation, especially on a weekly perspective as well. This wick region here, if I was to actually highlight this, do apologize for the sirens over there. If I do highlight this zone, make it a little bit lighter, as long as price remains within this region here and you continue seeing spikes through but candle body closures below, all it's gearing up for is a very big telltale sign that the market is going to fall, which this huge weekly reversal should have already given us a clue for. However, this looked like a clear trap and many people would have entered short on this region. And just using the risk to reward tool again to give you a bit of perspective on this, by the way, the risk to reward on such a movement is outrageous and it would not be worth taking under any circumstances. If you look at how wide a stop loss would have to be to even put it above that huge wick, everyone would have entered short here and tried to be smart and not place it above even the prior wick over there, placing it above this wick instead, only to have, let's just say in crypto terms, which is quite large, you're looking at an 812 pip stop loss for, let's just say, a potential pullback of going down to $10,000. It's still not a good enough risk reward. If you are looking to catch the $8,400 move, yes, it is a pretty high risk to reward, but you have a huge region here of interest where price has gone for. So as calculated wizards and smart investors and traders, we await the wick fishing to commence first. We capture the moves ourselves if we really want to make an extra profit, and then we start looking at more realistic opportunities. So for example, the $13,200 region, to mimic that exact same stop loss where it would have been over there, but placing it there instead, you're not only exceeding the huge wick over on this side here, you're capturing the movement from pretty much the highs of where price originally reversed from. So it's looking good right now. I'm hoping to see a bit more volatility around this region. Anything gets wiped out, I'll simply re-enter, as it's looking promising for now to see this come through. But overall, looking at how strong this level is holding up, we need to just be cautious. The 61.8 has always been a staple on a long-term perspective for BTC. So as we slowly see this shifting through yet again, we have to remain very focused on what could be a very sharp surprise and potentially even a 50% correction from this point. So always keep your eyes peeled on that. Again, these levels here, the 6K and the 8K and the 7K, have not been eradicated anytime yet, and they're actually becoming more closer than ever as a possibility as price begins slowing down around these estimated regions. So putting all that into perspective, what is going on in the overall crypto market right now? BTC dominance is rocketing. That's why there hasn't been too much of an XRP focus. You're looking at a BTC dominance of 65.4%. This is massively increased from the 62% that we have been looking at pretty much over the past 7 days. So let's go over to the BTC dominance. Where has it gone? Looking at around 65.4% over the past few days. We've been lingering around the 62% region, but before that we were around 50%. So it has been increasing pretty strong, and looking at highs for the year right now at almost 65%, it is something to take into consideration of why BTC's focus is much more stronger now versus the others. And looking at these now, a whole day of bloodshed in the market. Market capitalization overall, we are at around $334 billion in market cap, but we are seeing bloodshed all throughout the market, with only BTC being the real sustainer. Bitcoin Cash even down 7%, Binance Coin down not too bad, but even Bitcoin SV is down 8%. EOS taking one of the biggest hits today, 11%, XRP down almost 10%, Ethereum down almost 8%, but BTC has been holding strong. And as you can see now, the exact same key levels that were plotted on the prior Wizard Wednesdays. I'm not sure if they're on these charts here. I believe they should be, as I actually constructed these charts from scratch last week to get all of us back on board and in synchronization with the markets. And if you look here at around, let's see if we can zoom into that level there, you can see the 34 cents region was located just there where the Fibonacci setup was, 0.34 to 0.35, and that's exactly where price has now ended up, exactly where covered. Got some intraday zones up through in there as well, and as you can see, we snapped below, and I do believe now that we've fulfilled this region, we have to be a bit cautious of this weekly trend line here. This weekly trend line, this is the most valid level for now, but of course, extending this all the way out to here is just as valid and something you need to be taking into consideration. So I'll be plotting both over there right now. If you draw it from there to there, that does make sense, and it is a key level as well, so that is a big region of caution for me, because it looks like an excellent buy zone right now. You've broken above, we've finally retested this zone after breaking through resistance, but with so much room left down here, even down to 32 cents. Guys, you may recall, if you have a little linger through the Telegram and through the Wizard Wednesdays, I have been saying this since the very beginning of this surge. You should have been taking profits around this region. Although we are anticipating potential altcoin surges to some extent very soon, what you are seeing right now isn't the death of altcoins. You're not seeing a huge market shift to BTC. You are simply seeing BTC going on a huge bullish run, and of course many people are shifting their profits out of desperation or even their holdings over to BTC to catch on board the hype train. Yet again, this will result in some point in time another altcoin surge, but for now it shouldn't be the main focus. Seeing these pullbacks in the market right now should be a massive reason for you to be accumulating more. You're looking at the likes of where you were once at, and this is human psychology in play. Use these wicks as a good example of exactly what I said and why I covered the pullback in the first place from these regions. Let's go over to here. As you can see, we were slowly inclining lower, projecting these regions, even pulling down to around 31 cents. So this has all been projected. We've seen the movements, we've seen potential pullbacks as well. All of it's been occurring in real time, but what's most important to me is this wick region here. As you will notice, this wick, which is huge and rose all the way up to this level of around 48 cents. Not a single candle managed to close above this region. We saw the manipulative spikes through, just as we're seeing with BTC over here now, but the initial candle was not broken with a candle body closure. So we've slammed back down, retested this level, and now we can start plotting some Fibonacci tools as well. So as you can see, the 78.6 is located a little bit lower. We're currently on a weekly perspective, so we cannot wait for this closure just yet. We have many more days left in the week, but looking at how this trend line here is nicely aligned. Let's just draw that over there to match this current existing trend where we rocketed from. You can see the 78.6 around 33 cents does align very nicely with this level, and would be a region I'd be looking to take longs at instead of trying to take the risk here. Even if you see price action, I would give it a few days to really rest around this region. We've only just met this level, and there could be a little push lower down to this zone before price begins propelling higher. So in terms of upside targets, I still have 46 cents in my sights for the short term, at least in terms of any upside movement, because I do believe once this movement does come through, we can start locating. Let's just use this theoretically over here. You're looking at around 44 cents and 46 to 47 cents as a region of interest for a pullback. If you look at where the Fibonacci extensions align, however, they align perfectly with that 28 cents region and 22 cents located lower. As I've been saying since the very beginning of the year, all of this movement you've seen as of now was just a very short-lived movement, and it was wise to be taking profits from the all-time highs. And there's a reason why many people have gone quiet across social media now, and that's because they were still opting for that huge bullish breakout. But I've been telling you every step of the way, stay calm, stay collective, and focus on the potential of a downside pullback. Nothing in this market lasts forever, and all you're really seeing right now is a much smaller scale of every other pump and dump we've seen. So all we're going to be doing now is slowly but surely over time, I believe, heading back into that 30 cents region yet again, where huge levels of accumulation have occurred. So if I just get this zone up once more on the weekly perspective here, even though this is the crucial region where I like to identify. So basically these levels I've plotted over here are regions where very optimal levels of buy and sell executions can be placed. And the reason being is it's where the most wick accumulation has occurred, and it gives you the least amount of drawdown possible as long as price remains within these boundaries. So looking at this breakout here, you could be expecting a short-term retest on a daily perspective of this level over here. Nice short-term fib as well we can plot now that this is fulfilled, waiting for around 38 to 40 cents. Retest, continue down towards our downside targets within these trendline regions and boundaries here. From here, this is where it would be the most optimal place to catch that long all the way back up. But for now, we're simply shaking out weak hands again, exactly as anticipated, exactly as expected. There's nothing to fear. It's all been part of the plan. And I did say if we did not break 48 cents, you're going to see a market turnover. And it's exactly what is unfolding in real time right now. So we are heavily in synchronization with the market right now. Looking at this movement here, this could mimic exactly what you're seeing over here with the pullback, correction, retest broken ground, key level of support here, by the way, even up to around 38 cents, this level here. Let's mark that up. Retest, correction, trend lines, and the moving averages are here as well, as you can see. So we're working very nicely with price right now, support and resistance. However, I do not really use these anymore. I just use these as a little extra confluence because they can be quite distracting, especially when going for those larger moves in the market. And right now the price is being a little less responsive to the moving averages and a lot more manipulative than normal. So it's best to just stay out the way and focus more on the pure price action in its purest form for the time being. So BTC right now, 12,181, going over to BitMEX, that's now 733% with a huge return on investment within a single second. So realistically, what I'll actually do in this instance is just drag this down now. There's no need to be greedy. Price has pulled all the way down. I've captured a huge move in a single movement. More likely than not, if I was to plot even a single Fibonacci tool over here, and let's just say price started coming back to this region here, at least I've saturated every single bit of profit I possibly can just above that wick there, and guaranteed myself at least a 500% return on investment upon a single trade. And again, the key levels align, the extensions align with our downside targets as well. So there are confluences everywhere in the market right now, and it goes to show how what I've been saying for several weeks now is just filter out the noise, focus on the charts, and inevitably a turning point is going to come. And you're seeing that happening in real time right now. And the turning point is coming as a bit of a shock to many who are unable to really understand and comprehend what is going on in the market now, because they've been so fixated on the upside bias, they've completely forgot what could be happening in a matter of weeks once the bulls are done pumping the market. A good example as well was the 100 million USDT that was actually printed at the Tether Treasury just yesterday. And exactly as I said, what is becoming a very frequent occurrence now is the USDT is being printed, sent over to Bitfinex, and everyone is being tricked into buying. And all this is essentially doing is inflating the market higher. But all they're doing is, as the retail traders and any other investor that's watching and monitoring the USDT printings, they're going on board and using real capital to enter the market, whereas the artificial capital is simply enticing the investors in. USDT has been the sole focus, despite what many people say, of this entire drive upwards. We've seen that throughout the exchanges, and the USDT that's being used is being printed directly from the Tether Treasury and sent straight to exchanges. Not a lot of this USDT is actually deriving from existing wallets. It's coming from the Treasury, and therefore this is looking like a huge scale and a huge magnitude of a pump and dump in play. So now that you're starting to see the USDT being issued but not actually being sent to the exchanges and being bought or exchange for BTC, it's given me more of an idea now that they've started realizing what is actually going on. They've started realizing that people are monitoring their wallets, so they're simply sending funds back and forth between Bitfinex and themselves, and I'm sure there's some money laundering going on in that process as well. And alongside that, they're making profits along the way, but looking like they could be about to absolutely dump this market lower. So big regions of focus around here. Let's see if we can get that 11k push, or of course around 11,400 and below, and then from there we can start identifying what to do next in the market. But as for BTC short-term movements, I mean XRP, just be focused on 38 to 40 cents, any form of short-term movement there. But I do believe this is gearing up to start hitting the likes of 33 all the way down to 30 cents, which is where I will be looking and locating my own personal buy regions. For now, although we've hit one of my main targets, I'm happy to stay out the market for the time being. The altcoins are moving, although they're moving in sync with BTC, they are still moving slightly out of sync at the same time. In terms of BTC, look at where XRP is in terms of yearly highs, and then look at where BTC is. We are still within that yearly high region, whereas the altcoins have taken a little bit of a beating on the other hand as well. So for now, the calls are going perfectly. You've had $3,000 worth of BTC calls in less than a week. So putting all of that together, hopefully you guys have made a huge amount of money this week. I'm very happy to see all the profits you've been sending through. And again, don't be afraid to send them through on Twitter, send them through on Instagram. I'm more than happy to repost and share the positivity. Again, it's just showing that the Wizard strategies work, the Wizard community, the Wizard mindset. All of you are growing stronger as traders by the day. And again, if we see this short pull through now, from there we can reevaluate if we're catching along up to yearly highs and even breaching new yearly highs, or if we are going to start riding this wave down to 8,400 and below from this point onwards. So what I'll do is, instead of actually putting that there, I will be at the charts today anyway, so I'll leave the take profit untouched and I will let the market take care of itself from there.